Glad to have you here. I'm a longtime real estate investor, and on this channel, we help you build financial intelligence so you can build financial freedom. And one of the ways that we do that, of course, is through real estate investing. And today on our show, I'll open it up for Q&A a little bit later, but today I want to talk about a few different ways to come up with a down payment that you might not have considered before. This is going to be a really important way for you to move forward because a lot of people don't know that they have some hidden funds or unique ways in which they can get that down payment. For a lot of people, I see that they always sort of hit this brick wall and they think, well, I just don't have the money, if we unlock these different ways, they're blown away about the hidden capital that they might have. So welcome in everyone to the show. We work with clients from all different walks of life. And while many have large savings accounts to pull from, I understand that's not the case for everyone. But just because you don't have cash reserves available doesn't mean that real estate investing is out of the question for you. It just means you have to work a little harder to get that ball rolling. So if you're looking to build your net worth through rental real estate, but you're not really sure how to get started, here are going to be 5 sneaky places that you might find a down payment. So I'm going to go through these 5, and then we'll open it up for some questions and answers here on the stream. The number one way and number one sort of hidden sneaky way that a lot of people don't consider because they think it's off limits, they think it's the holy grail of being untouchable, is that retirement account. If you're currently employed, you can take loans from your 401k. It's your money. And while some people might try to tell you otherwise, there's nothing wrong with tapping into these funds to improve your financial situation. I know some of the very first properties I ever bought were as a result of borrowing from my 401k. Another thing you might not have considered is those old 401ks that you had that you left from a previous job, or an IRA that's just sitting there from a past job. We work with a lot of clients at Morris Invest that a lot of times people forget about these old accounts. And rolling them over into a self-directed IRA is a fantastic way to get started. And that's something that our team can do for you very, very easily. We have a great team in place that can handle that transition from an old IRA or an old 401k into a self-directed IRA and allow you to use that as a down payment on a rental property. Yes, you could use just that as the down payment and then have financing from a bank as the rest of it. So one new thing you can do is you can log into your online portfolio. Let's say, for instance, I used to use Fidelity. And I think it was like my401k.com, if I can remember the website from years ago. And you go in and check your statements, okay? And see what's available. Go into your account. You might have forgotten that you have 12,000, 15,000. I know it might sound funny to some people, like, what is Clayton saying? I don't just have 15,000 laying around that I've forgotten about, but some people do. Or it's something they didn't know what to do or use from their previous job and they didn't roll it into a new account and it's just sitting there. And you can also call your previous employer. Call your previous employer and find out if you have this account still sitting there. Many people do. It happens to us all the time. You might have money sitting there you just didn't know you could access. Number 2 on my list, home equity. Now, I'm a huge fan of tapping into the equity in your home. Do you own a primary residence? Remember, a primary residence is not a performing asset. It is an asset, but it's not performing. So what if you could make it perform, right? By tapping into your home's equity. I often say you cannot eat equity. So if your equity is sitting there, it's not doing anything, why don't you utilize it? And one of my favorite ways is by utilizing a home equity line of credit, a HELOC. Now, a HELOC allows you to take out a line of credit based on the amount of equity in your home. And I love this strategy, and I think it's a really smart way to start buying performing assets because you can explore this option by chatting with banks to see what your options are. And I know it can be a little difficult depending on the market situation, but again, I always want to talk with a smaller bank because some of the larger banks just aren't going to be interested in doing home equity lines of credit. Local banks, though, smaller local banks that have to be creative and compete against those larger banks, or in credit unions, they're often the best way to find those home equity lines of credit. So imagine being able to tap into the equity in your home in this incredible housing market that we're in right now, where housing prices have gone up 25% since last year. You might be sitting on a gold mine where you can use, let's say you've got 80,000 in equity in your home. That's enough to buy basically 2 rental properties. You could buy that could be 2 down payments on 2 new construction rental properties. Now you've taken that equity out of your home and you've turned it into cash flow. Not even just thinking about how, okay, I'm taking this money out to, as a home equity line of credit, but now I'm actually turning it into monthly cash flow. And that is how you can kind of take your home, which is not a performing asset, and turn it into a bit of a performing asset. Number 3 on my list is a partnership. Now, if you don't quite have the funds you need to get started, you can always team up with a partner, and it can be an incredible way to do deals. And partnerships can give you the access and the knowledge and the experience, the funding, the ability to grow your portfolio, and a whole lot more. Whatever your missing link is, you can find it by working with other people. So maybe you don't have a lot of money, but you have the time to do all of the legwork and handle the paperwork of the rental property. Right? And we have an in-depth 22-minute video right here on the channel on how to work with partners. It covers the main benefits of working with partners, how to vet a partner, plus how to do your due diligence before getting started. So we'll put a link to that later here. Right now, you can click on that video to watch our partnership video, because it needs to be mutually beneficial for both or all parties. And you really have to cover all of your bases before diving in. So make sure you check out that video. If you're interested, we'll have a link here so you can check it out. Number 4 on my list is private money. Now, I often get the feeling that private money intimidates a lot of new investors, but it shouldn't. Just think of private money, can come from a whole range of places. I like to think it's like Uncle John, it's private money. Uncle John is wealthy. You've always been a fan of what he's done in business, and you've always admired Uncle John. Well, take him out to lunch and tell him about the opportunity of investing and creating a partnership with him. Say, Uncle John, I really want to get started in real estate investing, but I'd love to seek your knowledge on this and see if it'd be something that maybe we could do together. I could find the deal, do the legwork on finding the great rental property if you would be able to provide a loan, at whatever interest rate you choose. Obviously, interest rates right now are like 3%. If Uncle John wants to give you an interest rate of 4% or 5%, at least it's a little, he's getting a little bit more than he would in the current marketplace, and he's willing to help out a relative. That it's always available. It's always around. You just have to be, looking in the right places. And it can come from a lot of different places, like wealthy and supportive, aunt or uncle who's happy to help you, or a friend, who wants to make a better return on the crappy interest rate in their savings account. You could partner with a friend and say, look, here's this investment property. It's a new construction property. It has a tenant already in place and it's cash flowing. I know you said you have $100,000 in your bank account just sitting there doing nothing. What if I could offer you a competitive market rate of like 4% interest in return if you're able to lend me that money for a down payment? Happens all the time. And that's a private loan right there. Draw up a promissory note. They would take a first position on the property or a second position. It depends on how you structure it. And you'd be paying them back, for 5 years, 10 years, however you want to construct it. Sky's the limit. Private money can also come from professional lenders. But private money doesn't have to be scary. In fact, it can be rather freeing since it's not regulated by the banks or the government. For instance, I've gotten private money loans and where I've been able to get a revolving line of private money credit that I've been able to use. That means I could pounce on properties very, very quickly. So how do you get started with one? Well, one of my favorite resources is Susan Lassiter-Lyon's great book. It's called Getting the Money. So we'll have a link to that book, Susan Lassiter-Lyon's, her Getting the Money program. Her book is fantastic. And she walks you through how to create a pitch, how to put together a presentation so that you can then reach out to different private lenders and see if they're interested. Another great way is that once you have that pitch built is to go to a local real estate meetup group. Go to your local REIA meeting, your REIA. And how you find those is by going to meetup.com and look for your local real estate meetups. And they usually meet like once a month. They might be at a Ramada Inn. I don't know. You go to and they might charge you $5 admission, covers a drink or whatever. And you put on a name tag and you walk around. You're going to meet realtors. You're going to meet investors. You're going to meet wholesalers. You'll meet contractors. You're going to meet private money lenders, hard money lenders. Just talk to them all. Make a reference list, and talk to them about, and these are the people you'll eventually want to be pitching your different properties and projects. And number 5 on my list is referrals. if you're wanting to invest specifically with my company at Morris Invest, we have a secret loophole that we don't really even talk about enough. I know one of our viewers, if he's watching right now, Don, he's taken advantage of this. He's been referring a lot of people to our company, and what's great about that is that he then is able to actually get money back on his closing costs and towards a property. So here's an overview of how this works. You refer someone to Morris Invest who ends up buying a rental property. You receive a $1,500 credit towards a new property or closing costs for you. Repeat. Use your credit immediately, or you can stock up and then basically get almost an entire property for free. So the more people you refer, the more credits you build up, and you could read our full rules and disclaimers and fill out a Morris Invest referral form. Just go to morrisinvest.com/refer. It's right on our website, so you can learn more about that. So if you refer people to us, you don't have the money necessarily for a down payment, but now, because you're referring people, you are building up your own nest egg that allows you to basically, in many ways, get a free rental property, because now you're able to use money from the bank and the down payment is covered because of your referrals. Another killer way to think outside the box about making and investing in real estate that way. I would love to hear from you guys in the chat. Which one of these methods do you think might work for you? Drop me a chat and drop me a comment below. And thank you, as always, for subscribing to the channel. And I'd love to open it up for Q&A. Ken Davis says, now it's 3 rental houses, 190 doors, and 3 multifamily deals. I'm not selling anything to anyone except I'm listening to Morris Invest. As long as you do it right, real estate works. Way to go, Kevin. Or way to go, Ken. Ron says, I tried the private loan. Ron says, I tried the private loan with my brother. It didn't go very good. Why is that? Did you actually do the loan, or he didn't take you up on it? I'm just curious. Here's a good one. Ken says, way back in 1984, my wife and I bought our first house as a personal residence. My parents offered to give me the then whopping $4,000 as a gift, but I insisted on paying them 12% interest. Wow. Back in the early 80s. Yeah, that's when interest rates were like 18%. Hello, RGs from Iraq. Nice to see you. Hello from Iraq. Nice to see you. Any questions you have? Exactly. That's right, Ken. So Ken says, I'm fortunate enough to have access to hard money, and that's how I can move quickly on single family deals. Yeah. Again, having access to those funds, and a lot of people don't realize they have, they can tap into these funds that are that allow them to move quickly on different deals. Hope everyone's having a good summer. It's been very quiet. It's been very quiet. And if you'd like to book a call with our team, you can do so at morrisinvest.com. Just go to our website, morrisinvest.com, and right there you'll see we've got a, let me pull it up here on the screen, we've got a book a call button, which allows you to jump on the phone with us for 30 minutes, and we can show you the different single family and duplexes that we have and walk you through our process. So here's what it looks like. So if you go to morrisinvest.com, click on the book a call tab right there. You can also get our freedom cheat sheet for free. When you click on the book a call tab, why is this not working? There we go. This will pop up a little dialog box that tells you or asks you what time zone you're in, and you can put in, choose the time on your calendar that you're comfortable with. And you can read, let me actually show you that the referral page. .com/refer. And so you can see what that looks like. Part of our ambassador program. Just tell us about yourself. Tell us about who you're referring. And you're able to build up quite a nice cushion there in order to use towards buying your first property that way. So really, really powerful way to get started. Oh, Ron, so that's what, so I was trying to find out what you said about this here. He didn't trust me. I get, oh, your brother. Okay. Was already living in the place with a contract for deed that ran out. I needed 40,000 to buy the place. Said that wouldn't work. I had to walk away, losing about 20. Oh, I see. Yeah, you just, as long as things are structured properly, and you have you understand each other's intentions from the beginning. That's always difficult. Exactly. Yeah. Try to find my 2-page here. There we go. Trying to get my chat popped out here. I can actually see it. Can't see the chat. There we go. YouTube's interface can be a real pain sometimes. Don, I don't. Yeah, we don't sell anything in North Carolina, Don. Our biggest focus right now is in West Texas, where we get the highest bang for our buck. Sure. Lindsay says, "Can I do a recap of the five methods for getting a down payment?" Sure. So if you joined us late, one of the 5 hidden ways in order to find money for a down payment on a rental property. Number 1 is a retirement account. Most people just don't realize they can tap into a 401k as a loan to yourself, not a withdrawal, but a loan from your 401k without penalty. You just pay it back out of payroll over the next 1, 2, 3, 4, 5 years, whatever you select. That's how I was able to buy some of my first rental properties. I borrowed from my 401k. Another way is that you might have a 401k from an old job just sitting there doing nothing. And you think, oh, this is fine. It's still in the stock market, so I'm not going to touch it. Well, I got news for you. You'd be much better off, in my opinion, to be able to transfer that into a self-directed IRA, which our team can help you with at Morris Invest. And you then are able to get up and running and use that as a down payment. Or the same thing with an old IRA that's just sitting there that you didn't know about. I had $24,000 in an IRA when I started out that just sat there. And I thought and I didn't know at the time. It's like, oh, I guess I just leave it there. What do I do with it? I didn't know what a self-directed IRA was. I didn't know that I could use this for real estate investing. So it just sat there. And then eventually I moved it and I was able to use it as leverage and able to buy rental properties with it. So that's one way, is retirement accounts. Number 2 is home equity. So the equity in your own home, if you're living in a house that is not a performing asset, remember, it's an asset, but it's taking money from you every month in the form of taxes and upkeep and all of that. So what if you could turn that equity that you're living in into a home equity line of credit? You could use that money as a credit line to then buy a rental property. Again, another great way that I got started in real estate investing is using a HELOC, a home equity line of credit, and using a small bank. Usually small local banks are going to be best for that because they know the neighborhoods and they have to compete with the larger banks, so they're more likely to do home equity lines of credit. The third way is a partnership. Partnering up with someone, whether it's a relative or joining forces with a friend or whatever, to come together as a partnership. And so you pool your money, not necessarily all of one person putting all of their money up as a down payment, but you come together, maybe 5 of you form an LLC together. So you each put just $5,000 down. Now you all have a vested interest in this asset. So that's one way you can do that, which is, watching the video. I have a full video on this. So again, we'll have a link in the description below. Let me turn this off. Sorry, I got this. Sorry, I had your question still up there on the screen, Ron. Yeah, what was I going to say here? There we go. So we have a full video. We'll link it up in the description. It's like a 22-minute video on how to structure a partnership and all of the ways that that can be beneficial to a new investor who doesn't have a lot of money. Can partner up with a few friends, and we walk you through that process in that video. Number 4 on my list is private money. Now, Ron here, who's watching right now, and mentioned that he said, fortunately he has access to private money, so he's able to pounce on deals pretty quickly. He doesn't have to deal with the banks and wait on that. So private money can be fantastic. It can be a relative that you're able to say, hey, my rich uncle, I know you're in retirement, you've got a lot of money, and maybe you want to help out your young nephew, or your young niece who's getting started in real estate investing. Would you consider, I need a down payment to buy this Morris Invest property. It's $45,000 down. The bank is going to lend us the rest on the back end. And we are going to, and I'll pay you, instead of paying a bank, I'll pay you 4% interest instead of the bank. Or maybe, uncle, I'll pay you 5%. That's 2 more percentage points than I'd pay a bank. You'd be helping me out. And the uncle will probably say, don't be silly, Clayton. I'm not going to charge you that kind of, I'll charge you market rate interest. Whatever the market rate is for interest, I'll charge you that. Technically, he has to, under the law. It has to be a market rate interest under IRS law. He can't just cut you a 0% loan. Otherwise, he will get in trouble, and that's illegal. So it has to be competitive with the current marketplace, just so he or she is not affected by the IRS. Just a little sidebar tip on that. Number 5 is referrals. We've got a whole referral program at Morris Invest. It's our ambassador program where you're actually able to earn money towards closing costs when you refer somebody. $1,500 credit, or you compile it and get $3,000. Keep building them up through referrals, and now pretty much you're able to get a free rental property because you've now referred enough people that amount is used towards your down payment, and the bank foots the bill for the rest, and that's like an infinite return on an investment. So our referral program, if you go to morrisinvest.com/refer, it's on our website, so you can check that out. So hopefully that's a good little recap there. Ken says, I wish I had learned this earlier. I'd have gotten a loan on the 401k and bought some property. Alas, I'm now retired, but I get real estate now and have tried to get my kids into it. That's great, Ken. Real Estate Chris says, what's your opinion on investing in Las Vegas? I don't do it, but I think, to me, Las Vegas obviously has a lot of upside. A lot of people are moving out of California and they're moving to Vegas. I don't invest in Vegas personally. One of the reasons I don't invest there is I think it's overpriced, number 1, for what we do, single families and duplexes. Number 2 is that it's also not pandemic resistant. And so this is something that, of course, came out of the pandemic. We would consider like, we don't want high crime, right? We don't want high vacancy rates. We want a lot of business, a lot of different businesses, universities, healthcare, tech, etc., right? We want a landlord-friendly state, all of those things. But now we need to add into it pandemic resistant. And Vegas got destroyed during the pandemic. And so when you have an entire economy that's built around casinos and tourism, and suddenly we go into a major lockdown and that entire industry collapses and MGM has to lay off 20,000 people, that's a problem. The same thing is true of Orlando. You think of these areas where you're not necessarily pandemic resistant anymore. And so be aware of those areas, in my opinion. Ken says, Morris, one other thing you should perhaps mention is the wonder of the credit score. High obstacle for some people, I know, but it really helps in getting loans. It's true. We actually, on our Morning Invest show, had a sponsor that I'll mention here if you want to check them out. called ScoreMaster. And if you go to scoremaster.com/invest, you can actually try it out for free. And most people don't, like, you can literally get 97 points fixed on your credit score in like a few weeks by using their service. It's called ScoreMaster. So if you've got a faulty credit score, and that 97 points can be the difference between a low or high interest rate on a car loan, on a house loan, etc. So again, go to scoremaster.com/invest. It can really help you with your credit score. So check them out. Robert, what is the initial investment for doing deals with Morris Invest? So our minimum down payment on one of our properties is going to be about $45,000 down payment, and then the bank financing the rest. So we really encourage all of our investors, use the bank's money. It's free money now. It's like cheap money. Use other people's money. Keep your own money in your pocket. So that's about the minimum down payment on one of our properties. And they're all new construction, built from the ground up. We used to years ago do, renovated projects. We don't really do those anymore at all. So ground up new construction. Here's an example. One of our duplexes, West Texas. Here's a single family. You can see ground up construction right there. So that's an example of what we do. And a tenant already in place. Once the construction is completed, the property management team places the tenant in the property, so that then you close on the property, and then it's cash flowing from day one. We have a whole video here on the channel with our property management teams that we work with. You can see their offices. You can get a sense of what that looks like, how they vet clients, how they vet tenants, etc. So we'll have a video linked up here if we want to publish that here in the chat as well, if you want to see what that looks like. Yes, a HELOC for down payment, Jeremy. Yes, you can use a home equity line of credit as a down payment. That's how I bought some of my first rental properties, was using a home equity line of credit. Now, I had a house that I lived in, and I had equity in that house. And remember, like I said, as I've said a million times, you cannot eat equity. So why not turn that equity in your own home into cash flow? So let's say you've got $100,000 in equity in your home, okay? And by the way, housing prices have exploded. So values have gone up 25% since last year. So you're probably sitting on equity. If you own a home and you've been in it, you've got equity. Turn that equity into cash flow. Otherwise, you're just sitting there not doing anything with it. So you cannot eat equity. So imagine taking that $100,000 in equity as a home equity line of credit, and you buy 2 cash flowing rental properties, brand new construction. Now you've turned that useless equity that you've been sitting on into, $3,000, $4,000, $5,000 a month now in cash flow from tenants in the property. And you've increased your net worth. And you now have created a tax shelter, right? So all of this is offset. So this is the beauty of real estate investing that people don't talk about, Jeremy. So that's, yes, using a home equity line of credit is a killer way. Let's see. Mark Ball, let's see here, says, please explain how one of the companies that you promote, Fund and Grow, can help long-term buy and hold investors like me who are not interested in flipping or wholesaling. Thanks, Mark. Great question. So if you go to our website, so Fund and Grow is another great resource. One of our longtime clients, Don, who I had the pleasure of interviewing just the other day, he used Fund and Grow. He loves it. He's been able to buy so many properties using this method. So on the top of our website, if you go to morrisinvest.com, you have to use this link because you'll save, I think you save like $1,000 or $500 off the sign-up fee. If you don't use this link, you don't get that savings. So go to the funding tab, and then if you want 0% interest funding, go right here to the website, fill in your name, and if your credit score is, put in what your credit score is, okay? And then click accept terms and hit submit. And then you'll be talking with the team from Fund and Grow. And they basically will set up 0% interest credit cards for you under a business LLC. that you can use as down payments or investing, however you want to use it. The thing I want to caution you about is that you need to have an exit strategy, because what'll happen is you'll get 0% interest for 1 year, and then it will jump to like 18%. Now, yes, Fund and Grow, they can help you roll it again into another 0% interest account for another year and another year. So you could do this for a couple of years actually at 0% interest, and they will help you with that. So it's a killer way. I want to make sure you're not, like, if you don't have any money at all and you use this strategy, you need to be very aware of, like, how are you going to pay off that initial 0% interest loan. But it is a killer way. I've used it. I was able to get up to upwards of $179,000 roughly for Natalie and I when we did it together. And it's better if you do it as a couple, by the way, as a two-person, because you get the benefit of a husband and wife or a partner, and you get actually more bang for your buck by doing it as a partnership that way. So thank you, Mark. Jeremy says, how hard is it to get an additional mortgage for a rental property on top of your existing lived-in mortgage? Jeremy, we help our clients all the time. It's very, very easy. It's very easy. Let's see. Are you open to partnering or an apprenticeship outside of your standard program? Goran, are you saying like you would like work for us and towards getting? It's not something I'm really interested in, if I understand you correctly, but maybe you could explain more. Well, Real Estate Chris, thank you for your answer. What states or cities do you recommend? I mean, I honestly recommend where we invest. We spend years analyzing markets before we start buying land and start building houses. So I don't want to sound biased, but I am. I mean, we have the best team in the business. And so I'm looking at, I'm excited about West Texas. I'm very excited. The growth there has been fantastic. We were there about 5 years ahead of it because we saw it coming. That's what our analyzing does. So we knew it was coming. And now we've still got many, many years of growth there. I mean, we've got incredible job opportunities, the tech industry, the healthcare, the university system, low crime, low vacancy, high demand, excellent school districts, best landlord-friendly state in the country in Texas. So very, very bullish on the markets that I'm in already. And I honestly can't then tell other people to look other places. I mean, that's really where I'm buying properties. We just rolled out properties in Odessa and Midland. We've got some exciting projects that we can't really talk about in Texas yet. Really exciting. But those are areas that I'm really bullish on. Amarillo as well. Andres, thank you so much. Andres over on Facebook says, hey brother, a while back you inspired me to get into real estate investing. I just want to say thank you. Thank you for those kind words. That means a lot. Efron says, I missed the beginning due to baby duty. Will you be able to replay this? Yes, you can watch the replay. In fact, I did my top 5 hidden things. I mentioned them twice. So I did a recap already also. I did it at the top and I did a recap. So, but yes, as soon as we're done here, you can click play and you'll be able to watch this indefinitely. Oh, that's great, Andre. So now you're buying properties using seller finance and subject to. Yes, that's another great way. Dream Big says, what's the total cost of the house after paying the $45,000 down payment? Well, that's a great question, Dream Big. Why don't you book a call with our team? Because we have a wide range of prices. And I don't just throw out property prices and homes here's a home you should buy. We want to develop a long-term relationship with our clients at Morris Invest. So there's not a one-size-fits-all. So what we'll do is in your first 30-minute phone call with our team, it's totally free, by the way. Everything's free, just except the house. You buy the house and you own it. Like, we don't own a piece of the house. You own the house. But book a free call with us. Let me just show you here on our website. And you'll have a download. There'll be a PDF download that we'll ask you to go through and fill out before our phone call. So it helps you figure out what your goals are so that when we get on the phone with you, we can ask you those questions that from your PDF download on your purpose-driven goals worksheet, like what are the goals? And that way we can figure out like, okay, does one of our, $300,000 properties work for you? Or does the, we have really like the lowest price is going to be like around 100,000, or does that work? And what are your finances like? And where are you planning to go in the next 5 years? And we develop a long-term relationship with our team, with our clients that way. So I don't want to just throw out numbers, but yeah, they're, going to be hundreds of thousands of dollars in different ranges from 100, 100, 300, 350 on up. Thank you, Ken. Says that's exactly right. I don't have any commercial relationship with Morris Invest, but he has been provided great content over the years. And despite being retired, real estate has grown. Now worth by fantastic! Your net worth is now up by 500,000. Awesome. Well, thank you, Ken. That's kind of you to say. Let's see here. Brian Thomas. Hey, Clayton, I've been meaning to ask you to clarify meaning of cash flow. When you use cash flow numbers, are they after expenses, or do you just refer to total cash coming in from rents received before expenses? Thank you in advance, Brian. So we've got a video here on the channel, which I really think will help you, Brian. It's on internal rate of return. We're going to link it up here in the chat if we can, here on Facebook for you so you can see it and watch it later. But we go through in that internal rate of return, IRR, so you understand. We actually show you numbers on the screen, break it down for you so you can see what we mean, expenses, taxes, all of that. But I want to talk about net cash flow. What is my net cash flow? Most YouTubers and real estate people always throw out, and you'll see some of these websites too that like just sell rental properties and they don't have any like personal connection, and they just sell you a rental property and they're done. They're out of the game. They're out of the picture, and you own this crappy rental property and with no recourse now. And on their website, it'll say, if you look at the fine print, it'll say gross cash flow or gross ROI, and they don't show, there's a reason they don't show you the actual ROI, the net, because it's less sexy. It's less attractive at that number, right? So I want you to, when you look at our properties, when you go through and start working with us, like we want to show you every detail of that cash flow picture and what that's going to look like. We even include like how it's going to look on your taxes, being able to have this particular write-off in this calendar year. So you can see the whole thing, your internal rate of return, and having the cash, and having the loan from the bank that's being paid down by your tenant. All of that has to go into the matrix so you can understand your IRR. So Brian, I hope you'll check that video out, and I think it'll be illuminating for you. If you have any further questions, let me know. Robert, great question. What's your thought on the mortgage forbearance program ending and the impact that it will have on the number of homes coming into the market? Well, I think what's going to happen is, and BlackRock has already said that this is going to happen, is that they are going to swoop in and buy them up. So, you're going to have large institutional investors, billionaires on Wall Street, that are waiting to sort of pluck these single-family homes out of the market, and you will not get a chance to buy them. They are sitting on billions of dollars in cash trying to grab these properties in San Francisco and these expensive areas, where this is going to happen. So I'm not quite sure, what's going to happen. It's going to be interesting to see how many people according to the data, are still behind on their mortgage, or have been able to get caught up now, back to work, caught up, new job. We know that there's an incredible demand for employment right now, 9 million jobs available. So I'm not sure. I'm more concerned, quite honestly, on the other side, which is the eviction moratorium, when that is done in a few days, on the 31st of July, what that's going to look like for these people that are going to wind up in homeless shelters because through no fault of their own. That's what I'm more worried about that. But the mortgage forbearance thing, I don't think we're going to see anything like we saw in 2008. And you're going to have these large institutions that are going to swoop in and grab up whatever they can grab up. Yeah, and 45 is going to be about 20% of the home. You're right, Steve. I mean, it's just, Stephen, it's just going to be, depends on if you're, a non-recourse loan, or because non-recourse, you're going to put more down, usually around 40% down. It just depends. See, Charles, what are you asking here? Hello, my name is Charles. The only question I have is how can I rehab finance? Going to get a rehab finance from a bank. I've been in the real estate business for 27 years, and I've always have to use my own money. This is where you may, just say, like, I would say avoid a bank on a rehab. I mean, I would definitely try to work with, you can try to work with local lenders who want to do a construction loan for you. They might be amenable to that. They'll pay out at different stages of the renovation. But you probably will have way more luck with a private or hard money lender. That's typically what'll happen. Hard money lenders are great for flippers. They're more expensive, of course, but there's more flexibility. They'll give you that line of credit basically for up to a year, 6 months to a year, depending on the project. And they'll usually take a first position on the house. So in case you skip town, they get the house. That's typically how it's done. Thank you guys. I'm losing my voice today. It's been like, what do you call it? Crazy allergies. Everyone in our house has been like sneezing. It's super, super dry. Nicole wants to know, do you think local credit unions are a good place to seek Helocs? Yes, local credit unions are also great for home equity lines of credit. Ronald Smith says, is this the best time to refinance my home? I can't give you financial advice in that way. I'm not a financial advisor, but I would say that we are in the best housing market we've arguably ever seen with 25% increases in values since last year. So if you're sitting there wondering if it's going to get better, I saw some housing data today that says like new construction home prices are starting to moderate. So, I would get while the getting's good if I were you. Well, thank you, everyone. I'm going to go rest my voice now. Thank you, everyone, for joining us today. I really appreciate it. You can watch this replay if you missed out. Just click when this is done, it'll wind up and you can just click play and watch it all over again. I said someone was on baby duty, couldn't get a chance to see that. So thank you so much. Seeking Trade says, I know a guy. Check out Universal Credit Services. They will fund the deal and rehab with 20% down. Nice. Check that out. So it's called Universal Credit Services. There you go. Thank you for that. Single family only, not multifamily. They don't do duplexes? Just single families? There's plenty of hard money lenders out there too that you can check into. Like, just literally just do a search for. You can even go on LinkedIn and find hard money lenders. Just do a search for hard money or even private money lenders. Yeah, that's why we do. We do single families and duplexes. That's our main focus. Well, thank you, everyone. I'm going to go rest up my voice. Thanks for a great stream today. Thanks for all your great questions. And I will see you guys next week. We do the same time, noon Eastern time, every Tuesday. So we'll be back here next week. Thanks, everyone.